For anybody out there with rental properties, whether you own current rental properties or whether you're in the market to purchase a new one or new rental properties in the future moving forward in general, you're looking to expand your real estate portfolio, we have a new program here at Premier Mortgage Lending called Debt Service Coverage Ratio or Investor Cash Flow Loan, which is a great product for you to use to expand your real estate portfolios and get into new properties or save money on your existing properties without qualifying with tax returns or income or employment. So stay tuned, guys. We're going to dive into this program and why it might make the most sense for you. Hey guys, my name is Ian Moore. I'm a loan officer here with Premier Mortgage Lending. Thanks for joining me for another episode of More About Mortgages. In this episode, we're going to break down our new debt service coverage ratio loan or investor cash flow loan specific for investment properties on both the purchase and refinance side. And we're going to dive right into it, guys. This new investor specific cash flow loan is just that. It is a cash flow loan, and you qualify using the cash flow of the property itself rather than your tax returns and regular traditional income and employment qualifying. When you don't use your income or your employment to qualify for a loan, how do you qualify? Well, you qualify based on the property. We're talking about rental properties only, 1 to 4 unit investment properties, meaning this applies to single family properties just like it would a 2, 3, or 4 unit property. And what it means is that if the mortgage payment on that property is $2,000 a month, the total aggregate rent that the owner needs to receive needs to be greater than the mortgage payment by at least 1%. So that rent needs to be $2,020 per month in order for this loan to qualify and this property to qualify for this debt service coverage ratio loan. That's amazing, guys, because almost every landlord out there or anybody who owns any rental properties is collecting a higher cash flow than 1%, let's hope, unless they just bought the house. But even that, rent is so high right now across the board that cash flow should be at 1% or greater for most people that own rental properties out there. Meaning, you don't need to submit tax returns to your lender. You don't need to submit W-2s. You don't need to qualify with your income or your qualifying ratios based on your income. As long as the cash flow on the property is 1% or greater, you'll qualify, and you got to check a few other boxes, but ultimately, you won't run into any issues. Key aspects of this debt service coverage ratio loan, guys, other than having the cash flow of 1% or more for each property, is you need at least 1 year landlord experience. If you don't have 1 year landlord experience or any rental properties that you've owned in the past, you can hire a professional property management company to operate as a landlord of that property, your rental property, if you do not currently have 1 year or more rental history. The reserves, meaning the money or the liquid assets that you have in your bank accounts or your checking and savings or retirement accounts, is based on the total number of properties owned. So you don't look at your banking accounts or your checking and savings and your retirement accounts for these reserves. You look at the total number of properties that you own, rental properties I mean, and ultimately the total cash flow that you have based on that total number of properties. So it's an aggregate cash flow amount will determine the amount of reserves used towards qualifying. 1 month of reserves equals 1 month of that mortgage payment. So you having $2,000 in the bank traditionally equals 1 month of reserves if the mortgage payment is $2,000 a month. But with this loan, it doesn't look at that the same way. Down payment, 20%, which is actually not that bad. In a normal traditional investment property, you need 25% down if it's a multifamily, 20% if it's a single family. Now you can utilize this program regardless of whether it's a single family or a 4 unit and only pay 20% down and avoid having to pay that extra 5% down, which can even make or break the deal for some people who don't have that extra 5%. So cash flow 1% or greater on the property, at least 1 year of landlord experience, or if you don't have that 1 year experience, then you can hire a professional property management company. The reserves, meaning the money or the liquid assets that you have in your bank accounts or your checking and savings or retirement accounts, is based on the total number of properties owned. Down payment, 20%. You need to have 1 to 4 unit property, residential, and ultimately the rental income calculation based on the current lease agreement and fair market rent. It's the lesser of the two. Therefore, if there is a current lease agreement on that property and for some of the units in that property, then you can use that lease agreement as the amount of rent that'll come in if it's less than the fair market rent for that property in that general area. So you can look online for the fair market rent in that particular town or city, and then see if there's any existing lease agreements and use the lesser of the two. Make sure that it's at least 1% higher cash flow than the mortgage payment at that property, or what that mortgage payment would be if you're purchasing it. And as long as you guys qualify with the cash flow, you're good to go. That's on the purchase side of things. If you're going to refinance using this investor cash flow loan, it's a rate and term refinance. Lease agreements must be in place with proof of at least a 6-month rental. Rental income verification, meaning that you've been collecting rental income for at least 6 months or more, and that lease agreement needs to be in place. So that's it for the refinance side of this debt service coverage ratio loan, guys. Awesome program for investors out there looking to expand their real estate portfolios. Anybody that owns a litany of rental properties already, depending on what the interest rates are, you might save some money by refinancing into the lower rates that this program comes with. So give me a call or reach out to your local lender to find out more information about these loans. It's a non-QM loan, guys, so it's not sold on the secondary mortgage market. Therefore, we don't need to adhere to a bunch of the regulations and guidelines that we typically would with a traditional mortgage loan. So I appreciate you guys joining me for this episode of More About Mortgages, where we dive into debt service coverage ratio loans and what exactly an investor cash flow is and what it means to you guys as a regular consumer out there. Appreciate you joining me. Please don't forget to like and subscribe on my page, More About Mortgages. The last time I checked, I believe I had 99 subscribers. So whoever is next, you'd be the 100th subscriber and you'll be hearing from me. So I appreciate you guys. Everybody have a great week. Ian Moore with Premier Mortgage Lending. Sign it off. Take care.